What's up, guys? This is Carter Thomas with Coin Mastery TV. Make sure you go to coinmastery.com/invest. Join the newsletter. Just put in your first name and email. I'll send you a bunch of free emails, PDFs, hopefully some helpful insights for anybody getting into crypto. And today we're talking about Cryptogeddon, bottoming out, the end of all things. I'm just kidding. It's just, another day in the life of a market participant, potentially a trader, investor, holder, whatever you are. And today what we're talking about is a lot about the price action, because that's really the name of the story right now, especially in Bitcoin. We're going to talk a little bit about Ethereum as it relates to Bitcoin, the proverbial flippening. Take a look at Litecoin. I know you guys know I've been talking a lot about Litecoin and looking at the charts on that. And then going through a little bit about potentially why this is going on. A few news items related to the U.S. government specifically. And then finally wrap it up with a bit of a perspective on some of the psychology that you guys can take from this. So to kick this off, we're looking at the daily charts here in Coinbase. And you can see, for anybody listening, we're looking at the retracement, same old. You can see that this is broken pretty significantly through the 61 level on the Fibonacci retracement. But now this candle is not closed, right? Because it's a daily candle. But I mean, that's a pretty big monster. If you look at it, switched over to the 4-hour. There's some pretty solid evidence that this is going down, and the volume is spiking, but it's not quite at the levels that we'd like to see it. Now, one thing that's interesting that you guys can do is I'm actually going to switch off the log function for a second, because I think that when you do this, it gives you more of a, not parabolic, but it gives you a little bit more of a zoom out view, or at least in a different way. Now, obviously, none of these prices are relative, but I do think when you're in a parabolic market, that the psychology of prices is different. So all log functions, right? The chart we just saw when log is switched on, it makes it so that a 10% gain at $10 looks the same as a 10% gain at $10,000, right? The graph will have the same level, or visually it will look like the same gain. But we all know that in reality, in real life, especially when you're dealing with retail investors, which typically don't have huge amounts of money, the changes in price when you're dealing with big numbers is significantly more painful psychologically speaking. That's why you get parabolic effects. It's also why you tend to get big sell-offs in a steep fashion. So when you're looking at this, it looks a lot steeper. Anybody listening on the podcast, it looks way more vertical, obviously the parabolic, and also looks a lot steeper as a sell-off. Very similar to that kind of chart we pulled up yesterday, where you parabolic, the second push to help restore faith, and now a bit of a sell-off. That chart is doomsday, goes all the way down to anywhere what would be 3,000, and so who knows what that's all about. But I do think that's helpful, because I think that we're in a market, remember, where the retail beat the banks. Individual investors all over the globe, developing countries, developed countries, rich, poor, everybody is playing in this game. And you got to think about the psychology. So in many ways, I think that the log function glosses over that. And you can, the evidence that drives that idea is really in the idea that the cheapest coins are the one that pump the hardest. And so it makes sense to me that the psychology of the big numbers is going to see this kind of sell-off. So just something to think about. Now, there are some interesting places to keep an eye on. I'm just going to I'm actually just going to, I'm going to delete this for a second, the retracement. And if you look now, just simply looking at the previous resistance levels, which if we zoom in here, you see what I'm putting here back in November 2017, you can see this resistance. So it's kind of the last big one. There was a little bit here at 8,200, but this was the real one. So 7,500 area, in my opinion, is the next big, we got to hold that level on some level. And then the big, the monster is going to be, let me push that there, move myself out of the way so you guys can see this a little bit better, is going to be right around 49-ish. And we get this resistance level. This happened in September of 2017. We also have, remember these these imperfections in the chart, especially on the daily, right? Where it just shoots up and it doesn't trade itself out. Like that's kind of where the parabolic effect started to go in, because it doesn't go up, 2 steps forward, 1 step back, 2 steps forward. It goes up 3 steps and then 4 more steps forward. So these are the 2 levels that I'm really interested in. And if this continues to fall, all right, I'm not going to lie to you guys. I don't know if this is going to bounce back anytime soon. When I say anytime soon, I mean, that could be a few weeks max, right? I mean, crypto goes so fast compared to relative markets. So, but this is what I'm doing, right? It's not financial advice, blah, blah, blah. I'm going to watch 7,500 level. I'm really going to watch the volume. I really want to see some huge volume spikes on the 7,500, and I want to see it sustain itself for a little bit. I want to see it retest 2 or 3 times and then bounce off with a big surge to kind of get us out of this funk. And if that does not hold, 4,900 area, 5,000, 4,900, this to me, I would be really surprised if this did not hold. To the point where I'd be willing to put in a good amount of money. This is where I've been waiting for this one for a very long time. That's where all my fiat is, all my alerts are set for that level. So if we do get that low, that's where I start deploying the real capital and then start layering bids down to, all the way down to 2,900, I guess, would be the next huge resistance level. I don't think we would get there, but you never know. You always got to make sure you got some gas in the chamber. That's the wrong analogy. Wow. But you got some bullets in the chamber, I should say, for that level. All right. So that's what I'm looking at. Whether or not you think that that's good news or bad news, it is what it is. And that's what the market's telling me. Now, interestingly, Ethereum is actually holding pretty well. In fact, if you look at the Ethereum BTC charts, which I'm not going to pull up right now, it's doing better than almost anything else from a pairing standpoint. It's meaning it's holding its value against Bitcoin or exceeding the value of Bitcoin really well. And that's a combination of it has a lot of momentum right now from a community standpoint. It's got a lot of ICOs running right now, which is driving a lot of transaction volume and things like that. But it's also just got it's the second in line, right? As Bitcoin does this, there's going to be a flight into new assets. Ethereum is next in line. And if we go over to coin market cap, man, I'm all over the place. And you look over at the Bitcoin dominance, you can see that Ethereum is really starting to make some moves. I mean, it's up to 22% as of today, 22.4%. Bitcoin's at 33%. So Ethereum's eating up a lot of market cap, not only from Bitcoin, but from a lot of other altcoins. And it's making its way up, as we saw last June, right around this potential flippening area. Now, the only difference now is that the other category, which is all the other high market cap coins and everything else, are eating up more of that pool as well. So what does this mean for you? Well, it means that Ethereum it's got something that the market likes right now. And if I had to guess, it would be ICOs are still using a lot of Ethereum, right? As are NEO, but there's just not as many NEO ICOs as there are Ethereum ICOs. And that continues to be a viable use case for crypto. So if we remember from yesterday's video, if you haven't watched, I would encourage you to go watch yesterday, like the last 10 minutes of yesterday's video, because I talk about this, the network capitalism stuff. When you start to look at how these prices hold, demand is what keeps the price up, right? If you don't need a coin, if you don't want a coin, the price is going to eventually fall, right? So if you don't need Bitcoin for anything, the price is going to eventually fall. But if you need Ethereum so that you can buy ICOs, guess what? The price is not going to fall nearly as much. Now, eventually that may fall for different reasons, but that's a really helpful way to think about it. The network is just stronger right now. That's what's keeping the price up as it relates to crypto. So flipping over to Litecoin, same thing. We're looking at this retracement. We're kind of going all the way back to the beginning of this particular big bull run that happened starting in March, kind of a longer term bull run. And you can see it really looks similar to Bitcoin. I'm going to switch over to the log function here, scroll over, switch off the log function, and you can see it's the same thing where you've got this major problem with the chart right here all the way down to almost 105. But then when you get to 90, between 90 and 100, you've got a lot of resistance levels. And that's where you're going to see some major support. That's going to mirror Bitcoin like it always does. If this continues, if you're trading, it's very, very hard and very, you typically don't want to trade against the trend. There's a famous book, what was it? The one about the stockbroker, the musings of a stockbroker, whatever it's called. But he talks about how there's kind of 8 phases to a trading cycle, and more money is lost in the first and the 8th. People trying to time the trends than anything else because they think that that's where they make all their money. That's more of a psychological exercise, whereas you typically want to wait for the trend to reverse before you buy in. It's why it's good to look at daily candles and things like that. So with Litecoin, even though I really like it, this chart does not look good in my opinion, and so I'm gonna hold off and just let this thing play itself out. I want to see some sort of reversal before I really dive in, specifically through the volume. But that's where we're at. All right. Now, again, I just want to reiterate because a few people hit me up about this. When you're looking at buying, if you are looking at buying an altcoin today or whenever, and you're looking at the price, if you're going to buy it with Bitcoin that you already own, make sure that you are buying a coin that is down against Bitcoin versus if you go on CoinMarketCap, right, and you're looking at USD prices and you say, oh, look, Cardano's down 15.89% right now. I'm getting such a deal. But if Bitcoin's also down 9.8, you're actually only getting a 4 point whatever percent deal. You see what I'm saying? Right? If you switch over to Bitcoin, you could see that, or 6.7 in this case. So you want to make sure you're getting an actual deal versus if you have fiat, you actually are getting this kind of deal. So make sure you're calculating your buys, especially on altcoins. If you're using crypto to buy altcoins, make sure you're calculating your buys on the in the currency that makes sense for you. All right. Not a lot to report, in my opinion, on the CoinMarketCap, other than the Ethereum holding its strength, holding its price really well. I think that's just because the network right now is very strong, because people are using it to fund ICOs, and also because it's the second in line in Bitcoin. And I think that one of my theses of 2018 is that Bitcoin is going to lose its power over the market over the the next few years. I think that won't necessarily impact Bitcoin's individual price. I just think that you'll start to see coins moving independent of each other more than we do right now. It won't be like, for example, meaning Bitcoin will stop being the S&P 500 or the NASDAQ, and it'll start to be the Facebook of the stock market. It doesn't drive everything. It's just one of the leaders, if that makes sense. All right. Now, why is this happening? A couple pieces. The first, so in India, which is one of the bigger crypto markets, huge demand in India. They just don't have a lot of exchanges, and the exchanges they do have massive premiums. So it's always been difficult in India for people to get a good amount of crypto, but for a variety of reasons. And so the who was it? The finance minister gave a speech yesterday. It's on YouTube, and I'll link to this, where he basically said, I'm going to quote him: "The government does not recognize cryptocurrency as legal tender or coin, and will take all measures to eliminate the use of these crypto assets in financing illegitimate activities or as part of the payment system." Now, look, you hear that and you're like, oh my God, they're going to ban crypto. That's it. It's done, right? As can be seen, some of these tweets, it's like India's, the end is near. But in reality, he actually just said, these are not legal tender as of now, right? It's like these are not recognized by our government. And separate point, we are going to stop every use case we can find where it can fund illegal activities. Meaning, in my opinion, they're going to just start getting serious about regulating all of this. That's what it really means. And so, for good reason, right? They're like, we don't want this to fund illegal stuff, drugs, terrorism, whatever. And so when things get lost in translation, as a headline reading community, the crypto space, this just throws gasoline onto a fire of FUD, and you get more and more sell-offs happening. Now, this is only one piece. Obviously, there's a lot more at work. Specifically, if you look over at this, if you go on the U.S. Senate Committee on Banking, Housing, and Urban Affairs, they do regular hearings, and they also do special hearings. And so they're doing one next week on February 6th, and it's going to be a hearing all about crypto. But the kicker is that they're bringing in everybody. So they're bringing in, let's see, the SEC, the CFTC. I'm sure FINRA will be there. I'm sure the FTC will be there on some level, and plenty of other people. But most importantly is that they're all getting together, and they're going to talk about what they're going to do about cryptocurrency. Now, you got to realize behind the scenes, these agencies, these parts of the government, they have been hiring huge numbers of people, like hundreds and hundreds and hundreds of agents and investigative special task forces to look into crypto. And this, in my opinion, is like, how are we going to really execute this? How are we going to do it the right way? How are we going to capitalize on this? So the good news is this is a long time coming. We have to get some regulation in place. We need to get this framework, and we need to get it over with, right? Because in speculative markets, which is what crypto is, right? Anybody who tells you otherwise it's ridiculous, right? In a speculative bubble time frame, you need this regulation to come in so that there's custodial stuff that can come in. We've all heard this before, right? And so the bad news is that if they do come out with something from this that is not very conducive to more investment or more aggressive investment or things like ETFs, if it doesn't facilitate growth, we may continue to see downward prices. So we're going to keep an eye on this. Again, it's in a week, so we got a little time. Call your senators. If you live in the United States, call your congressman. Let them know what you'd like to see, or how you feel about crypto and what kind of regulation you'd like. It does make a difference. And what we're gonna keep this in mind. So there's something's brewing. You can, like we said yesterday, when it rains, it pours, and we're just gonna keep an eye on this and voice our opinion. Hopefully. Lastly, this is just a tweet I put out this morning. I said, a market's primary function is to move money from the many to the few. And when you press the sell button, especially in times of fear, think about who you're selling to. One of the best things that I've done since I started trading crypto. So I've been in crypto for 4.5 years now, like buying crypto. Got serious about it about a year and a half ago. Like started buying heavily into crypto. And then about maybe 8-9 months ago, I actually bought the bullet and started trading some crypto, like actually watching the market and trading it. It's been a great learning experience. But one thing that happens is that if you start trading, it's looking back at the Bitcoin chart. Let's say I think maybe like April or May. If this is when you start trading, and you're trading all through this, all the way through December, of course, like everybody is gonna be a trading guru, genius, winner. Like it's impossible. I shouldn't say it's impossible, but it's very difficult to lose money over this time frame, especially if you don't overtrade. And and it's also the byproduct of that from a psychological standpoint is that you think that it's like you're in this world and everybody's just like rooting for you, and we're all gonna end up with Lambos and crushing life and winning, and that's great. Like it's just gonna go on forever. And as you can see in January, that's not the case. And one of the best things that someone told me, and it was right around July, that's when I started this channel, give or take, and also when I started getting serious about scalp trading and discipline and stops and all that good stuff, is adopting this mentality of this is actually a competition. Like financial markets are about winning more than they're about price or volume or anything. It is truly like the final frontier of warfare, intellectual warfare, if you want to call it that. Now, this is an extreme example. This is obviously only my opinion. So plenty of people have different viewpoints on this. I'm just saying for me, what's really changed is that every time I buy or sell something, I always think about who the other person is. Why are they going to buy it from me? Why are they selling it? Like what's their incentive model? What do they know that I don't know? Why are they doing the opposite that I'm doing? And just going through that all the time and making me think about how, and anyone who's been watching or listening to this for a while, that one of my whole things is you only want to be buying or selling when you are like, man, this is the deal of the century, right? This is such a steal. Similarly, when you're selling, like, man, I'm so glad I'm selling right now. This is the best place ever, whatever. And so when you start to think about it like that, you realize that there are two sides to each trade. And when the trend is going down and down and you're thinking about selling something, it's really helpful and really important, in my opinion, to start thinking about who's the buyer, who's sitting on the other end of this trade, whether it be on Gemini or GDAX or Binance or Bittrex or wherever you're trading. Who's sitting there buying up your sell order? Do they know something you don't know? Are they accumulating it? Do they have $100 million budget and they're just waiting for you to sell all your Bitcoin to them so they can build a war chest? And the more you think about that, and what I can tell you is that when there's a lot of fear, and especially when it happens this fast and this big in a market that's this hyped with relatively inexperienced investors for the most part, I would say that's kind of true. The people who are buying all this Bitcoin, yeah, I'm sure some of them are retail and some of them are trying to buy the big dip or whatever, but there's a lot of big funds and banks just with huge reserves that are just picking off these sell orders and just accumulating this fortune of Bitcoin. And they're going to keep doing it, and they're going to keep layering their bids all the way down to the bottom, and they have no problem buying all the way down to $500 or $100. I'm not saying it's going to go that low, but they can do it. And so I say this because one, it's a smart trading strategy. It's worked for me really well. And two, especially when the futures were announced, right? I mean, this was back in September, October, when LedgerX came out and said, oh, we're going to allow futures trading, and the CME and the CFTC and the CBOE, they all had approvals and everything else. Everyone was like, oh, this is going to be really good news, because there's no way they can, financiers or bankers can push down the market if they don't own crypto. And at first, that's kind of what I thought. Like, they're just going to buy Bitcoin so they can hedge themselves. But the more I got into futures, right around November, the more I learned about it, the more I talked to people in the precious metals commodities world who have seen the power of futures markets to control a price, even when it's cash settled futures in many cases. I learned a lot about how fear can drive a market even if you don't own it, as we're seeing right now. And the conversation that came out of that is people who own Bitcoin, holders, whoever, are like, oh, well, they'll never get access to this Bitcoin because they're never going to actually own it. They're just going to own the cash futures, and nobody is ever going to sell because we're all holders long term. And that's a generalization, but this is what's happening. Don't you see? Like, these committees are getting together. Do you think these guys like are on our side and they hate bankers? Or are you kidding me? Like, the guy who wrote the crypto laws is like, I mean, this is what's happening. This is the whole thing unfolding in front of us, where they're pushing the price down. They're getting the fear out there. They know that people are going to have weak hands and sell their crypto. And they're just going to buy it all up. So you can do whatever you want to do. That's your call. But what I will say is that this is not an accident. This is not by chance. All this stuff coming out at once. This is not a coincidence. And you can try to time it. You can try to be like, oh, maybe if you believe it's going to go down, you can, hey, maybe I'll sell here and rebuy in back here. You can try to make that bet. But that's a hard game to win. And so I'll leave it at that. You can draw your own conclusions from that. Obviously, you can have your own opinions. I hope you do have your own opinions. But that's how it works. People with a lot of, and think about that. Think about what it would feel like if you had $200 million in cash, in US dollars, and you were like, man, I really want to corner this crypto market or Bitcoin market or whatever. And you were seeing this, and you had access to futures. You had very good relationships with the media. You had very good relationships with the government. You had a lot of power and lobbying, all these sort of things. You had $200 million on a $9,000 asset, to like a $150 billion market to begin with. That's only trading, $8 billion a day. You could just sit there and just buy it up and spread the fear and just keep buying it and keep pressing and keep going as long as you wanted to. Or you could just keep pushing it and wait until it gets to the price you really wanted to. And you have no limit on how much you could buy back in. And you could just trickle it down so that the price falls and people get really scared. That's what it's like. Imagine if you had a limitless budget, how you would go into this market, right? When would you start buying? And you had a limitless budget, but you couldn't lose any money, or else you'd lose your job. Makes it for a very competitive environment. So anyway, I'll leave it at that. Exciting times. I know the punchlines. Everyone's like, well, what are you doing? What are you buying it? No, I'm watching. I'm waiting for a reversal trend at this point. Whether it happens at 7,500 or 4,900, I don't know. Maybe it happens right here. Doubt it, but I'm waiting for that reversal trend. I'm waiting for confirmation. I do not care about trying to time the bottom. I care about seeing the bottom, watching it go up 5-10%, and getting serious confirmation that was it, and then starting to buy back in. All right, that's just me. You do you. All right, guys. As always, it's great to see you, talk to you. I will catch you tomorrow. Peace out.